there is no secret or holy grail to actual trading, okay? But I will give you a tip or piece of advice that may help you out in your own trading when it comes to futures, whether it's the NASDAQ, okay, the E-mini S&P, all right, or maybe the Dow or the Russell or any other future market. So let's talk about that, because it doesn't matter if you're trading the micros or the E-minis, okay, if you want to call them the macros. What I like to look for is always confirmation for or of rejection. Now, lots of times I'll always talk about trading in the same direction of the overall trend of the market. So if we're bullish, we want to trade bullish sentiment or in the bullish direction, meaning up. So if a higher base chart is telling you or showing you that we are continuously breaking structure to the upside, then all we need to do is find key areas of demand, which are fresh zones, ones that are untapped, ones that have not been mitigated. Yes, unmitigated zones are zones that are going to hold most times, or at least the market will reject them. And we're looking for means of rejection. Now, when I look for rejection, I'm not looking at my higher base chart looking for rejection. I'm scaling down to a lower base chart to try to get into a more precise entry point. This is the imperative part about using charts, meaning confluence. The more confluence you have, meaning using a higher base chart to determine the direction, and then just using your lower base chart to scale down and look for an entry point. Now, even from a counter trends perspective, you can still find opportunities, because you have major and minor structure that we look for when the market is moving, okay, when it's flowing. So it can continue breaking structure to the upside and breaking and taking out major highs or running major lows, or even taking out minor lows or minor highs. So traders always ask me, is there an opportunity to actually trade against the overall grain of the market, meaning if the higher base chart or time frame is bullish and the market starts to break through, say, minor areas of structure on a slightly lower chart, can I look to go short? All right. Yes, you can, but you must know what you're really doing, because if the market is moving against a higher base chart, okay, on a lower base chart, so we're looking at a lower base chart and then we see where it's starting to break through some minor area of structure to the downside, but the overall direction is bullish from a bigger chart, then just be mindful, just because we're breaking down on a lower base chart doesn't mean that we are done pushing to the upside. So for example, right here, if we look at, I'm looking at my 120 range chart. I trade range charts. And yes, I trade supply and demand. So we're looking for either a supply or demand area to trade from. And we're going to tap into and talk about that tip, that piece of advice I'm going to give you that to me, it's not a secret, but I would like to say it's a secret component, okay, that I like to use that aids me in getting to my trades. So, all right, so the market is moving to the upside, and we can clearly see it's breaking structure. Broke structure above here at 278 or 279, and it's breaking to the upside. And then we get this slight pullback, okay? Have we broken through any major area structure? No. If we move down to a 60 range chart, this is a chart that's slightly lower, okay? This is that same structure break above here at 267 or 260 or 8 or 9, okay, whatever. But anyways, the market is moving to the upside. Now, as it's making these higher highs and higher lows, because that's all market structure is structural breaks to the upside or downside. It makes this ultimate high right here around 348, 18,348. And then it starts to move lower. So we have a shift to where the market starts to break lower, okay, meaning swinging, making lows and lower highs. And we have to say, now on the lower base chart, on one that's slightly lower than 120, okay, or this could be maybe a 60-minute chart for you, or whatever higher base chart that you actually use, and you're looking at, like I'm looking at 120, okay. I don't know which charts are comparison or basically comparable to one another when it comes to tick volume, time, and range, okay. I just trade range-based charts and what works for me. I pick pair charts that I like to trade with. All right, so if the market is running to the downside here, I see right here below at 232 or 231, we broke through a minor area structure below this area. So as we're making these lower lows and lower highs, and if we take out a minor area structure on my 60 range chart, is it or will they provide me an opportunity to go short? Sure, if the market retraces back to a key area of supply, even when the market is bullish to the upside. But let me say this, let me clear the airways. If you are a new trader or a beginner trader, please try your best to trade and wait for opportunities to trade going back to the upside if the higher base charts are telling you and showing you the market is still bullish. Yes, the reason why I do this sometimes is because if the market doesn't provide me opportunity to take a long entry, but I see that on my slightly lower base chart, we are breaking a minor area structure, I will look for the short-term opportunity to take a short, okay? In this case right here, where the market pulled lower, okay, and then retrace back to this area right here. Also, right here. So if I mark this zone, say for example here at 258 or 259, all right, on my 60 range chart, and we are breaking, slight structure to the downside on the 60 range, then I'm going to look for a pullback, to a key area supply. This is supply. Aggressive selling to the downside right here, right? So as the market retraces back to this area right here, what did I say, 259? All right, retraces back here. I just moved down to my 12 range chart. My 12 range chart is the chart I use to get into a more precise entry point. It allows me to get into, I'm able to finer tune the trade I want to get into or at a better price area, because we're talking about buying at areas of discounts areas, okay? And so that's buying the lows, and then we're talking about selling in areas of premiums where the market, basically I like to use my my volume profile to see if we're above a high volume area. So you can see with the market pull back right here, we're above a high volume area here. We're actually in this low volume area. And this box right here represents that higher base 60 range demand, supply zone, not demand. All right, and when we tap into it right here, I'm back down to my 12 range chart. All I do is look to see where the market is breaking through an area of structure back below. So if we a small high on this pullback right here, and then I see, let's blow this up a little bit, it turns back around, it breaks lower. So it broke this small little low right here at 256. And then it takes out another area of a structure right there. I say, okay, now we've got some this aggressive selling to the downside. We took out two small areas of structure right there. So if we have the supply area, okay, off this little swing that took out two areas of structure, I'm just going to look for a pullback on the lower base chart to go short. Because, again, we have this supply zone, the market's breaking structure or minor areas of structure to the downside on the 60 range chart. I move down to my entry chart to look to see if we get some breaks of structure to the downside where there's a key area of supply and the market pulls back to it. The market pulls back right here. I'm looking for just the break and close of the candle in the opposite direction to go short. We look back over at our higher base chart and say, okay, well, where can the market run to? It's definitely more likely going to take out this this low right here at 18,236 and maybe test some areas or below, okay? So we can look forward to run the low here at 236. So if we get into a trade, say at right around here at 253, we could take it on down to that 236 area. Now, here's another, excuse me, let me show you another setup right here, okay? Then the market taps into it, gets a rejection, breaks lower, okay? All right, makes a new low. Then it pulls back. We have a new lower high, okay? And then it breaks structure again to the downside. So when we see these types of breaks of structure on a slightly base chart and we're breaking through minor areas of structure on a lower base chart, then we can look for opportunities to go short until at some point the market turns back around and starts breaking structure to the upside, as it's starting to do, as it did towards the latter part of Friday's trading session, okay? And right now we're kind of moving sideways, but even though we broke through this area right here, just be mindful. But anyways, when the market, after it breaks, or if it breaks through a minor area structure on a slightly lower base chart than your, say, a higher base chart, okay? My 120 range chart is one that I'll look at to give me the overall direction, okay? That lets me know which direction I should really be trading in. But if we're breaking structure, even minor area structure on a lower base chart, like a 60 range chart, then I'll start to look for opportunities to go short until the market on the lower base chart here, say the 60 range, starts to shift and turn back around to the upside, taking out structure. So we have still a structure break here to the downside where it made aggressive selling. So this is a supply, but be mindful to where we're looking for this pullback at this key area supply. What's down here? We have the support right here, okay? Which means that the market more likely is not going to run this low. There's a thick area of support resting right here, but it can reject this area at this area of supply and at least come back down here to the low, right? So when the market gets back to this area right here, And you know, the market can do some funny stuff sometimes. I mean, it came up here, it tapped into that supply area, and as you can see, it rejected, but it didn't come back down here and fill this gap in. And then it pushed back up, rejected again to come back and fill that area. Now, it's more likely not going to break that low on the first test for sure because of this area of support out here. All right, even though we're breaking and taking out minor areas of structure to the downside, we didn't run this area of support right here. So you've got to pay close attention to the market, the price action, understand what's resting above you or below you when you're actually trading. So when the market gets back to this area right here, if we move down to the lower time frame, the 12 range chart around 11:07 last Friday, this was that first test into that zone. Yes, you could have taken an opportunity to go short if you're simply waiting for and looking for a structural break to the downside. All right. So the market runs, it taps into it, runs lower, breaks this area here as it pushes lower, comes back, taps into this small area of supply right here, small area of supply. Okay, you can see it. All right, and when it taps into that at 225, if you get the rejection there, you can go short, but just be careful what's resting below you if you get into that trade is that you have an area of support resting out here from this area over here. So around like 209, 210, somewhere in that area, the market could possibly, you know, just, it's a block right there to where it may not want to push any lower. It did push a little lower here, as you can see, but just be careful when trading into areas of support. Look to your left-hand side of your chart to see what's there and to see if we haven't taken out any areas right here of support. Then be very, very, very careful that even though this is a supply, you got support resting right here to the left side of your chart. Okay, and then the market again, like I said, you know, the overall direction is to the upside, so it starts to break structure to the upside here, and then it starts to move higher. So this area right here would actually be, that's a minor break of structure once price breaks above it, and then pulls back to maybe this area of demand right here. Now this is an area of demand right here. Now it tapped into the demand zone right here. It pushes back up. So basically we didn't get the break of structure until you see where the market pushed up here, it pulled back, and then it broke structure above here, meaning it broke above 18,244. All right, so yeah, it pulled back before breaking the area of structure, so it pulled back to this area of demand. But there's still an area of imbalance resting inside the demand zone in which the market still has to fill. So if the market comes back there, you can expect or hope for some rejection to go long, right? And we get the rejection there. If we move down to a lower base chart, you know, you'll see where it's rejecting it to go long. This is the first break of structure as the market turns back around and starts pushing to the upside. Lots of times when you see the first break of structure created or formed, that should give you, most times it's a telltale sign that they still want to continue pushing to the upside. Even though we've got this pullback here where it's breaking minor areas of structure, the higher base 120 range chart is showing us that the market is still bullish to the upside. And when that market turns back around, this is where I talk about trading in the direction with the overall higher base chart. Wait for the break of structure. The first break of structure back to the upside, because we are bullish, still bullish, is a telltale sign the market still wants to go higher. So you just wait for a pullback to a key area of demand, get the rejection, and then go long. Now, a lot of times what I like to do is if I mark a zone off of my higher base chart, say for example, this one here, this one, or this one here, in the market, once I move down to a lower time frame chart, I like to see on like my 12 range chart, my entry chart, where the market is showing a break of structure, you know, forming on that particular chart there. So like right here, this zone right here, let's move to the 12 range right here. So we tap into that 60 range supply zone. When we tap into it, then I want to see some type of setup to where the market's showing me structural breaks to the downside, right? Sometimes that won't always happen because the market will tap into the zone and just quickly move away from it. It may be like a V-shaped reversal in a sense, okay? And the market doesn't actually, it may be like where it's, let's say for example, like right here, where it pushed up right here, okay? And then any area of structure below before it broke was way down here. So the market to get up to say a zone, all right, which in this case here, let's take a look here, because I believe this was a supply zone as well. I'm not sure how it got unmarked, but this is a supply zone resting right here. Let me draw this out better. Right there. So in this area right here, okay, this was at around 1045. Put us at right here. The market will pull back up here, right? It'll pull back up here and just push it hard to the upside and then give us a V-shaped reversal, okay? And the first areas of break structure back to the downside is going to be below here at 239 or 240. But as you see, it doesn't immediately pull back up here. It just keeps pushing to the downside. Sometimes we won't catch those type trades like that because the market may be moving too quick or it's testing the zone real quick and then flushes away. In this case here, it came back to the zone. It formed structure on its way right or immediately right below the zone, and then it broke back to the downside, forming a nice, beautiful supply area there. Now, another thing I like to do sometimes is if there's actually a setup of a zone, whether it's supply or demand, right at or near the higher base chart zone. So, for example, let me show you. So that demand zone right here, all right, where it broke up, okay, and we start to get the, it started breaking structure to the upside. After we get the break of the structure to the upside, most times, like I said, that's a telltale sign they want to kind of push higher, and the market's already bullish on the 120 range. When we finally pull back to this area here, after breaking above here, say at 18,244, move down to the 12 range, this is that area right here. And lots of times you may not get like a setup to where the market as it's pulling back to where it breaks above an area of structure. Okay, cause that's one thing I like to see lots of times or wait for is when I move down to my 12 range is see a structural break to the upside and then a pullback on the 12 range. So if I'm looking to go long and it's a demand setup on the 60 range, it breaks structure to the upside on the 12 range. I'm looking for a pullback to a key area demand. Sometimes we won't always get that beautiful setup like that. But if I notice that inside the zone at which we are on the 60 range in the higher base, well, say the 60 range chart, okay, where I mark the zone or the zone at, like right here, this is that 60 range zone from this chart here, the 60 range demand zone. When it pulls back there, if I see a a demand zone inside of the 60 range zone. So this is giving you multiple means of confluence, multi-chart confluence, meaning a zone within a zone. Okay, if that makes sense. Well, we have a higher base zone we mark, and then we have a smaller base zone on a lower base chart like the 12 range. That is confluence, and that's one thing we talk about in trading is that the more confluence we have, especially at a higher base chart like a 60 range, a demand zone, and then the market taps into a zone like that. So we got a higher base chart and a lower base zone formation. That's kind of setting itself up for a powerful means of a trade situation to unfold. So look here, this is a zone within a zone. If I mark this right here, okay, boom, right there, you see that? So we have 60 range zone, the big one, 12 range zone, the smaller one, pulls back, rejects it, blasts off to the upside, and where's it going? It's going to go higher, So because we broke structure here to the upside, first attempt, breaking structure, bullish on a higher base, 120 range chart, you can expect that it's going to go push to the upside because it hasn't taken out any major areas back to the downside, like right below here, any major low to where it's going to push lower. So this is the first attempt where it's breaking structure on the 60 range chart, and then we just move down and find a beautiful demand zone within the higher base demand zone area, and then it breaks to the upside. Multi-chart confluence. So these are like little secrets or tips that I kind of add into my own trading that helps me out and gives me more confirmation or more confluence to take the trades. Okay. But the biggest overall thing you really need to do is be patient and wait for and look on your charts, wait for the right opportunities. The key to it all is understanding market structure and understanding shifts within the market in which you can look for opportunities to go trade. But I'll say this again for anyone that's a new trader or beginner trader out there, try your best to trade overall in the direction of what's going on whatever higher time frame chart or higher base chart you're using. If I'm trading using my 120 and I'm a new trader, beginner trader, then I only want to take trades going long. This situation, case in being, this would have been a beautiful opportunity to go long because the higher base chart is still showing me that it has not broken through any major area or any area of structure. So it's still bullish. So looking for opportunities opportunities to go long, I want to go long. Okay. Even though the 60 range is breaking through some minor areas of structure to the downside, it's not taking out anything major that that should entice me to want to go short, unless you really have the experience. Okay, now this is counter trend trading if you know what you're doing with the structure on a higher base chart. Again, it's bullish. And then on a slightly lower chart, it starts to break minor area structure. Yes, short term, this is a short term downtrend. to where you can look for opportunities to go short. But the moment it starts to push back around, turn around, and starts to break structure back to the upside and starts to align back with the overall bullish 120 range chart, you want to be looking for long opportunities. I hope this video finds you some value. Hope it provides you some information, a bigger insight on what to actually look for. Again, this is how I trade supply and demand, and just kind of put my own twist and flavor onto it, and adding, this is my tips, my bits of advice I can provide to you, little nuggets that I can give you that may help you in your own personal trading, and I truly hope it does. But look, if you're not a current subscriber, please take the time to go ahead and sub, watch some of the video content, spend some time on the channel, learn possibly the strategy, and maybe put your own flavor or your own little twist on it and make it your own, maybe use it and kind of merge it into something that you're currently doing already, but just kind of give it a try and see. The best means is the back test, but ultimately the best way to actually trade any strategy is to get in and have real-time engagement in the markets, whether you're demo or simulation, so you can get the feel and the flow of the market and understand what you're looking at. But the number one key thing you need to master is market structure. I'm gonna leave it there. If you found value in today's video, please drop a like on today's video. As well, if you want to join our Discord community, scroll down to the description portion of the video. You'll see a link that says become a Discord member. Click on that, okay? And you can become a Discord member for free. Anyone that's interested in becoming an elite member, you probably already know what it is, but there's a link that says join, which you can click on. There's 2 tiers that'll pop up. And it's a YouTube tier membership program for $6.99, and basically you get the trade breakdowns where I go into deep detail about the trade opportunities or trades I take, ones that I post on Discord. Lots of times I'll make videos out of them and go into more detail for those that are private community members, to where they can get the full-on insight and thought process of what I'm thinking, what I was thinking about as I was taking an opportunity to take a trade, as well as you get the additional valued content that I do post from time to time over on for those who are elite channel members. And if you want to become an elite member, just scroll down below, click on the link right below the Discord link that says become an elite member, and you'll see 2 tiers pop up. Make sure to choose the one that says elite channel supporter or elite channel member for $6.99, and you'll have access. All right, that's all I have for you guys today. Again, if you found value in today's video, please drop a like. Take care.